What is going on, investors? Hopefully, you guys had a wonderful day out there. It is time to talk about Zoom Video, ticker symbol ZM. Over the last year, stock's down big, actually, about 39%. We got a market cap on this one of about 75 billion. Yeah, 75 billion with a B. We'll talk about what that means from a fundamental perspective here in a moment. We'll also look at this from a technical perspective as well. The stock actually is bouncing nicely off an area of support. It was at about $240 per share earlier today, and we're seeing in the after hours, stock's up about 7%, up to about $258 per share. We'll talk about that from a technical perspective now. The stock is moving because it just reported their Q3 earnings. Those came in at just a shade over $1 billion. That's 35% revenue growth year over year. They did beat expectations by about 30 million bucks. Now, their Q4 guidance, so the quarter that we're having upcoming, is expected to come in basically at the same rate. So about $1 billion worth of revenue. Now, they also gave us guidance for the upcoming year, so the next 4 quarters, and they're looking for revenue to come in between basically $4 billion. Essentially, what Zoom is telling you is the growth rate is over, okay? So yes, year over year, we're still at fantastic growth rate on a quarterly basis and then a year over year basis for the last trailing 12 months, but this stock is starting to flatten out from a growth perspective. But keep in mind, the stock is reacting nicely in the after hours, so it could be investors appreciate the stability that this stock is going to offer in the upcoming quarters. We'll talk about this here in a minute from a technical perspective, but let's go over to the fundamentals as well. Keep in mind, we've got a $75 billion valuation, but we got a massive war chest of cash over here, about $5.3 billion on that straight cash side. What I also noticed down here is this company almost has no liabilities, because the liabilities, the largest liability on the liability side of the balance sheet is actually deferred revenue. So this is revenue that they're probably recognizing, but they haven't delivered on. So when they bill you for a whole year, Zoom can't recognize that revenue until those months start passing. And so this is basically held for upcoming revenue. This is why the company can be so certain about their upcoming revenue, because they basically already billed and collected this money from customers, and it sits here on the liability side. So when you factor in $1.1 billion worth of liabilities are actually revenues that are going to be recognized, this company has a crystal clean balance sheet. And I think what it has us thinking is, what is Zoom Video going to do? Can they make an acquisition? Can they roll this company up into something different? That is something that I think every Zoom investor has to think about, and actually I think wants to hope for, because as we see this product, I don't want to call it mature, but in terms of their revenue growth, I think it's matured a little bit. We're at a $1 billion or a $4 billion run rate on a full year basis, and I don't think that's necessarily going to go up or down by a whole lot in the coming years ahead for Zoom Video. Now, we've got our profit and loss statement. I love what this company is doing. And I tell you what, if this stock were to somehow break this level of support and then come crashing down, it's not happening in the after hours right now. We'll talk about this from a technical perspective, how it's setting up to go one way or another pretty hard, probably, I would guess, in the next couple of weeks. So we'll talk about, there could be an opportunity. And one of the reasons why I like this stock is this is a fantastically run company, okay? So we've got our 3 months ended here. Our left-hand column is our revenue. So there's our shade over $1 billion. And again, we're guiding for that in the fourth quarter, and we're guiding for that basically for every quarter next year as well. We were sitting at about $777 million worth of revenue. You see our 9 months as well, painting the exact same story that we just had in the quarter, okay? Since this is for 3 different quarters, we've got this $3 billion here, basically $1 billion a quarter. That looks like what Zoom is running on. Now, fantastic gross margins on this company. Take a look. We went from 777 on our revenue up to the billion, and look at the cost of revenue. It barely budged, okay? It went from 258 up to 270. We got gross profit off this $1 billion worth of revenue. Really nice. $780 million worth of gross profit. Now, in terms of our operating expenses, R&D basically doubled. Sales and marketing went up quite a bit. General administrative stayed flat. That's what I like to see at this company. They did a nice job keeping this G&A expense almost flat, basically flat. Everything else doubled. I don't mind the sales and marketing basically doubling, or basically adding on $100 million bucks, and R&D doubling. This company needs to come up with new products, innovation, or they need to go out and acquire companies. That's what this company needs to do, in my opinion, to really make a ton of sense on this $75 billion valuation. Now, we've got a total operating expenses went from 326 last quarter up to 488 million. So we take our 779 in gross profit, we minus off this 488 million. That gets us income from operations really nice, okay? Up $100 million year over year on a quarterly basis. Went from 192 up to this 290. Paints a similar story over the last 9 months. It looks like to me this company is going to do what we'll call it $1.2 billion maybe on that income from operations. Again, you're paying like 70 times, okay, operating profits on this one. You're paying a massive amount, okay, 20 times virtually on sales, not quite that much, but you're paying a lot of, this is a pretty rich valuation for a company that is guiding for basically flat year over year growth going into next year. So we've got to have something out of Zoom, I think, to really start making this investment make a ton of sense. Now, from a cash flow perspective, you guessed it, this company just prints a ton of cash, okay? On a quarterly basis, on a 9-month basis, we're printing a boatload of cash, okay? And it looks very similar to the net income we're pulling down. So this company is very clean. It's our traditional kind of tech company with an absolutely crystal clean balance sheet, very nice growth rate in the past, but that is starting to level out. And now we're wondering what's next from this company because they still have this premium valuation. Now, in the after hours, investors are kind of liking their scene, but I am seeing this stock beginning to pull back in the after hours. So it was when we started this video, and these things, believe me, they can jump around. This stock could break this level of support and be down 10 bucks any moment now, okay? So just understand that when we record these videos, it's kind of on the fly in terms of after hour trading, and you've got a real thin volume likely as well. Now, what I am noticing though is this stock is starting to wedge out. So what you're sitting on a level of support here at about 240, we'll just round it off, $230, $240 per share. Some give or take 10 bucks down here. 230 to 240 is a level of support, okay? It acted as a level of support back here. This was back in August of 2020, and now it's acting as a level of support again here in November of 2021. When you start to wedge out, now we are in a downtrend on this one, okay? Because you have a high, you have lower high, it tried to break through here, but then it gapped down. Now we're making lower highs. The stock is, in a downtrend. And so when I see these wedge formations, what typically happens is you're looking for kind of the break above, or you're looking for the break below support. I would not necessarily really be excited about jumping in on this stock until we see which way this one wants to go. And look, you're not going to catch this one on the bottom if it happens to break up, but you give yourself a big margin of safety on this one if we start walking back up. Remember, I talked about how we have this large gap here in the price action right here between about 305 on the stock and up to about 335 on this one. I would before I stepped in on Zoom and before I thought, hey, this little downtrend that we're in, this is over, I'd want to fill this gap. So the stock would really want to get above this trend line that's trending down, and we need to get up here in about $340 per share. That'd be the sign to me that this was actually kind of just a shorter term downtrend on this stock. It's broken back up to the upside, and if we can get up to 340 on this one, I think you can absolutely test these highs, which are all the way back to 390. Okay, that's to give you like $40 or $50 upside on the stock. I mean, that's well more north of 10% on this one, and it gives you a little margin of safety. Now, if the opposite happens, I see now this stock is breaking lower in the after hours. Believe it or not, now we're down 1.87%. Well, this level down here at about $238 per share. Again, give or take $5-6 on this one. You could drop it down here to probably about 230. Well, if you break this level, oh my goodness, there's not a lot of support here. Yeah, there's some candles here, but whenever you have these kind of vertical candles, man, you can cut through this price action really quick. We could pull up a chart of PayPal, for example. Notice what PayPal's doing. PayPal's cutting through areas of support. And I tell you what, you got a level here at PayPal at 181. You break that, then it's going to be really ugly very quickly. So Zoom, looks like to me it's not a stock I'd be super interested in getting in over the next couple days. But if we break below this 230 level, you are going to find some buying opportunities down in this level. Not only that, this valuation will start to make a lot more sense on this one, okay? You got a 52 forward PE on this one, and we talked about how next year they're guiding to that $4 billion mark on that revenue. My guess as well is they'll clear about 1.2, maybe even as much as $1.5 billion to that operating profit side, because you notice that this year they printed about 800 million for the last 9 months. They'll probably do a Q4 that's very similar to the most recent quarter. So they'll have about $1.2 billion worth of this income from operations. Next year, maybe they run some efficiencies. Maybe it's a little bit better. They get up to about 1.5 billion operating profit. We're still really richly valued on this one, okay? And so if you can get this stock to pull back, all of a sudden you get this down south of, we'll call it maybe 60 billion valuation, maybe even $50 billion valuation. Well, now maybe we can start arguing that this is a value stock, and we also start to bet on what this company is going to do with just a massive amount of cash. Look, $5 billion compared to what Apple and Microsoft have is not a lot, but to this company, $5 billion, no debt, very profitable, very strong cash flows. This company can do a lot. It can acquire companies, especially smaller ones. And if it wanted to leverage up its balance sheet, take on some debt, issue some more shares, do a stock deal, they could acquire a gigantic company and make this company even bigger. I think that's your upside with Zoom. So it's risky. I actually think this stock is kind of risky because you do need them to do an acquisition. You do need them to do something that's a little risky from a financial perspective, because right now they're playing it very, very, very safe. And I think at some point it looks like the market is starting to run out of patience with this one. We'll see what happens in the coming days. Like I said, I think we're at an area of support. I think we could bounce here, but I really wouldn't want to get back into this one until we probably filled this gap, getting up over about $330 per share. Then we could have a nice little run, at least test these highs to the 390 levels, maybe even higher up into the 450 on that one. I'd like to pray a breakout on this one. We'll see if it materializes in the coming weeks ahead. That was Zoom video. Hopefully you guys enjoyed this video. We'll be back again soon with more. Good luck with your investments.